Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for a quick look at the CL2, which is crude oil futures. And we're in a bit of limbo at the moment. This is coming out prior to the CPI release data. No doubt there'll probably be fireworks immediately on its release, which will probably solve a lot of the issues I'm having here. If I could wait, I would, but I've got to get it out now as it's just my schedule. It's too tight at the moment to leave it any later in the day. I've got other work I need to do. So we're just going to present the situation as I see it at the moment, and you'll know soon enough what happens, I guess. We're going to start by just removing the counts for the moment. I'm just going to gather up this one here goes in the bearish corner. I think that's correct. Okay, so first things first, classical analysis. Let's see what we got. Right, we've come back to the 250-day exponential weekly average, weekly moving average right here, and we've basically gone bung, bing, bung. You know, we're hanging around between the 60 and the 250. Okay, 250 is basically the dividing line historically between major swing lows, consolidation periods, swing lows and swing highs. It's just we move through it and then move above it, we move back to it, consolidate, and we either carry on or we break down. Right, it tends to be like that dividing line between the two. We've got divergence on the MACD over a weekly time frame between closes. We've got divergence on the RSI between here and here. Right, so bullish behavior on the indicators on the weekly time frame. We've broken this downward resistance line here in the OBV, but the volume that we've accumulated here hasn't taken out any prior swing high here yet, like this high or this high. It could easily be a case of simply adjusting this trend line before we roll over again. So we've seen what could be a small breaker trend. The long-term trend from these highs here is still plenty intact, and a lot of work to do to reverse that bearish situation. So that's the indicators on the weekly. If we come down to the daily for a moment and have a look, we've had that depth cross of the 60 through the 250. As I often point out, you know, we get that cross of the 60 through the 250, and that's often synonymous with a low forming, and then we move back up as we've done here, but it doesn't mean it's the bottom. Okay, sometimes that depth cross can symbol the bottom, but it's more likely just we're overdone it, we're going to have a rebound, then we're going to continue lower in some cases, and that's what we've done here. We've got this as the current low. I'm not 100% confident. You'll see why, because the count off of that low is very tricky. But if we look at the fib retracement, we've come back to the 50. This is in linear, and we found support. We know that coincides with that 250-day weekly moving average. Okay, we come back out to the weekly for a moment. Come down to the 50, come back to that 250. We've come into this demand zone here, which if we use our FRVPs, we can see all of this thicker trading here, this area. You know, up and back, found buyers, up and back, found buyers, up and back, found buyers, overlap, overlap, overlap. Bunch of buyers in here, bunch of volume in here, bunch of support in here. And on that note, if we have a look at those support levels, we can see that we've basically come to the 72.74 level, which is these series of highs and back-tested highs here for resistance, now becoming support. We've settled somewhere in between them. We've still got the 61.8 below us. Maybe we're going to come down a little bit deeper. We want to find that, you know, golden ratio. It's quite common for a wave 2. That is what we're assuming we're in at the moment. 50 does seem a little shallow. It's deep. It's deep enough, but coming off of zero essentially. I know it's not here in the CL2 chart, but it's essentially what oil did into a new bull market. One would expect a pretty significant retrace, but maybe 50 is enough. You know. Either way, it's potentially there. I've started using fib time more often now because people seem to like its inclusion. Depending on whether you take this as the high or this as the high, because we have weekly closes above this one here, but we have a higher weekly intra-weekly price with the wick here all the way up to 126, so that's officially the high. If we take the fib time off of that, we can see we're not quite at the 1618 yet, and here's the 2 out here, so that's when the corrective move would equal the impulsive move. This is when it would be 61.8% of that impulsive move, which is the first real area we look for to find a significant low. Doesn't have to come down to here. I've explained I've often had very hit and miss experiences using fib time in the past, but Some people swear by it, so I've decided to start including it more often. Now, one thing I do find kind of interesting is if we were to come lower into that 61.8% support zone, the two golden areas cross over here, and that could potentially be what we're going to try and do. Come down to here, and that would be a very strong area of support at that point if we do. Alright, so that is essentially the classical analysis situation as I see. So let's come in and have a look at the Elliott wave, and you'll see the issues I'm having coming off of the low. So 5 up into a 1, W, X, Y, X and Z. I would love to subdivide it as a flat, but I can't because it isn't a clear motive structure down from the high to be even a diagonal for a C. It's just not there. It subdivides too many times. I would prefer that over a WXY because even the X coming almost back up to the high strikes me more as the behaviour of a B wave than it does an X. And then this comparative X just seems awfully small by comparison. I'd love to be able to go A, B, C, but I can't get an impulse into here, so I just have to subdivide it into another zigzag. And that's what I've had to do. So from there we've gone A, B, C again into the Z. And what we see down here off of the low, let's come down to the hourly time frame, so try and get a bit of extra detail. Is we can either say 1, 2, 3, 4, 5, which is what I would prefer. This is essentially counting it as a diagonal. That's why we've got an overlap of the 4 and the wave 1. We come up into a diagonal for a minute 1. We then get A, expansive B, 5 down in a C for a flat. At that point, we have to try and get this to be a motive structure. Yeah. Now, it could be potentially forming, this could be A, B and C into maybe an expanding diagonal, right? Maybe. I honestly don't know. It's too early to tell. We seem to have 5 waves up here. We certainly don't have a clear 5 waves here, so it's not a zigzag on its own. It could be a WXY as a corrective structure, and therefore it will be featured in our bearish count. I'm struggling to make sense of it as a motive structure, but sometimes in the early phases of perhaps a diagonal, especially if it's of an expanding variety, the initial price action can look like dog shit until it clears up. So I'll give it some benefit of the doubt, but not much. Some kind of 1, 2 coming in here, but like I said, it does not look impulsive at the moment. It does look corrective. So 1 into 2, it's no longer the primary, hence why I've now labelled it bullish, because this is really letting the side down. This little bit here at the moment. So let's look at the bearish count, where we've shaken things up a little bit, changed things around a little bit. Now what I've done here is I've concluded the count with the higher weekly closes as a truncated fifth within the 1. So instead of this being the top back over here, this is now the top over here instead. And what we've done from there is we've come down in 5 in a diagonal. This is here, let me just clarify that. Into an A, we've got A, B, C into B. Okay, and then we've come down in C for a W here. So in that sense, it's not a million miles off what we did in the bullish count. See, another diagonal. A, B, C. So we're just taking this section here and implanting it into that bearish count. From there, we come to this pivot. And instead of having the X wave here, Y that would have been in our initial count, Y, and this is X. I've decided to go A, B, C to X here instead. What that does is allow us to extend the correction into yet another zigzag, into another Y before we get our final Z, because we've gone W, X, Y. So, or we can use it as W, X, Y, X, Z, but I've decided to just say W, X and Y. So what this means now is we've come down in 5, 1, 2, 3, 4, 5. We've corrected into a B, and now we've gone 1 and 2. Okay, because this is all corrective junk. Now it's possible that I've got a little B here, and what we've done is A, and we're going to go W, X, Y, B. Have to stay below this pivot here, and then come down into the C of the Y. But for the meantime, the best I've got for you, and I've got to make sure which point I've got here is the right one. That's the wrong one. Here's your invalidation point. 5 down into 1. Some kind of W zigzag into 2, and now we're going to break down violently. 3, 4 and 5 in oil. So come into a 3, we'll break that previous low, break that 250 exponential average, and we'll push for the 61.8 on the larger time frame. A move above this level, 81.62, adds confidence to the bullish count, although it does not solve the lack of a motive structure here. So we have to keep this idea, A, B, C into B, in mind. Looking for maybe a 1-to-1 relationship as a zigzag somewhere up here. Doesn't have to be that high, that's a 123.6, but maybe some kind of free wave move. But the thing is, it's a high, it's a low, it's a high again. So on a larger time frame, if it's bullish, what we would expect to see is, that's 1, that's 2, 3, 4 and 5. If we get 5 waves out on the larger time frame, that will pull back again into a smaller degree, 1 and 2, and that will be a better buying opportunity. That will clear things up. On a smaller time frame, you know what we're always looking for. If you're a patron and you're one of our members, we're looking for that STS setup where it's available. Not a great entry because of the lack of impulsive behaviour here at the moment, but maybe it will clear up in time. So there you go, guys. There's your 2 counts. I know, super quick video today. Bullish, we've gone 1 to a higher low. Now we're going to push to a new high, looking for 3, 4 and 5. That's the bullish count. Invalidation at 70.31. Bearish count is we've got further to come lower. We've got lower to come, and we've got WXY, and we're going to go 1, 2, 3, 4, 5 down like that. Okay, guys, that's basically it for oil. We'll find out what happens later today. See if the CPI release has an impact or not, or if it's already been priced in. It's always a possibility as well. And I will hopefully be back with an update for the market, maybe early next week. For the S&P. No doubt it will come up in discussion in tomorrow's live stream, which I need to announce to my patrons, as well as a bunch of cryptos and stocks to cover as always. So if that sounds interesting to you, you can access that live stream when it becomes available by becoming a patron and joining the Discord. If you're interested, there's a link in the description box below. Head over, have a read of the tiers. You need to sign up to tier 2 or tier 3 to get access to that, and feel free to sign up. Huge thank you to the patrons who are already subscribed. And if you're new to the channel and if you like what you're seeing, please subscribe to the YouTube channel, smash the like, hit the little bell notification icon to remain informed of future video releases, and feel free to leave us a comment in the comment section below. Alright guys, take care of yourselves, and I'll be back with you as soon as I can. Bye bye.